All right, then, so let's focus on a narrow subset of some of the things that Mr. Hichilema will have to deal with, specifically Zambia's debt restructuring. Zambia's currency and its Eurobonds both rallied following Hakaiende Hichilema's win in the country's August 12th presidential and parliamentary elections. Zambia's currency, that's the Kwacha, had lost over 50% of its value in 2020 as the COVID-19 pandemic spread worldwide. It then defaulted later that year on servicing over $3 billion worth of Eurobonds due in 2022, 2024 and 2027. But since the start of the quarter, the Kwacha has gained around 16% against the American dollar. That's the tail end of that particular graph there. Now, the price of the Eurobond due in 2024 has risen from October's lows of around 42 cents on the dollar to nearly 76 cents today. Before any wider restructuring deal can be agreed to, however, Zambia does need to secure an IMF program. Some hours ago, I did speak to Mark Bohlund. He's a Senior Credit Research Analyst at Red Intelligence. I started our conversation by asking him what are the key challenges that lie ahead for Africa's second largest copper exporter.
The election turned out to be freer and fairer than expected, and the opposition which now got voted into government, did better in the also in the government heartlands, the kind of Bemba-speaking areas in northern Zambia. So it was a very clear outcome of that election.
But at the same time, it might be arguably a bit premature to celebrate because, we still have to deal with questions around debt transparency. How much is owed to China? How much, on what terms is that borrowed? How do we arrive at equal debt treatment with this new administration vis-a-vis the old one? So there's still quite a few things left to do.
Yes, you're right. There's still a lot of outstanding issues. The incoming president, Hakaiende Hichilema, has said, he's clearly stated that he's prepared. He wants to negotiate with the bondholders and the other creditors, and that's what the rally in the bonds is. The bondholders are expecting there to be a more open negotiation than actually moving forward on this, but there's still a long way to go. The immediate priorities will be for Zambia to secure an IMF program, and then sort of get the creditor committee formed and start the negotiations. And as you probably know, a sort of sovereign debt restructuring is on average takes about 8 years, if I'm not mistaken. So it's going to be a long process.
Okay, let's move away from Zambia for the time being, because another interesting development in the Eurobond market has been with Ethiopia. Yields on their notes due in 2024 have gone all the way up to over 10%. Walk us through the market sentiment around that.
Yeah, so there was a steady climb in the bond yield on the Ethiopia 2024 over the past few months, and that was, I think, highly connected to events on the ground where the winds of fortune in the war seems to have turned against the government. I mean, now there's the quite crucial Addis Ababa Djibouti railway has been cut off for about a week or so, and I think this is pricing into the Eurobonds. They realize it will be more difficult for the government to exclude the Eurobond from any debt restructuring, which is clearly what they had signaled. So what we heard about 2 weeks ago was the finance minister who confirmed that a credit committee would be formed later this month. It's a committee of creditors to kind of one part in the negotiations with the government. And they also confirmed that they had concluded an IMF review the week before, so that would be in late July.
So once the credit committee is formed, what sort of options are on the table? Might we be expecting a deferral of payments, perhaps over specific windows, 6 months, 9 months, a year?
I think, the IMF has clearly signaled in this sort of common framework that they want sort of deeper restructurings. They don't want to have this process where you have just quite a sort of easy or quite a short deferral, and then, a couple of years down the road, you have to do the same process again. But then they kind of changed tack early this year and also kind of opened up the framework for kind of more kind of market-friendly debt restructurings. And I think that was partly with reference to Ethiopia, which applied for the common framework process in January. And I think they were hoping for kind of a deferment where they could exclude the Eurobond and get a deferment of mainly the Chinese loans. But since then, essentially the war fortunes have changed, as I mentioned. And what we hear is, the Chinese are putting down the foot and, really have been one of the factors. They haven't signed off on this creditor committee. They have in other cases preferred to do kind of debt restructuring on a bilateral basis. So, I mean, this is just part of the process of kind of bringing in China as the biggest bilateral creditor into the sovereign debt restructuring framework that's normally conducted in the Paris Club in Paris.
Indeed. So one last question for you. Looking at the price chart for the Ethiopian, for the 2024 note, because it's gone from around 102 cents to the dollar in September last year. Now we're trading around 89 cents to the dollar. I mean, that's roughly what, a 13% collapse relatively quickly. How established is a concern that among Eurobond holders, rather, that they might not get their money back?
My impression from talking to some of these bondholders is that they still expect a creditor-friendly restructuring, just a kind of extension of the debt repo of the maturity of the profile, and not really a haircut on the debt. But I think that is an optimistic assessment, just because the political challenges on the ground and the conflict with Tigray, looked to be almost over earlier this year, but then the Tigrayan separatist forces have come back and now, have, expanding and almost cut off the Addis Ababa Djibouti link, which is more or less a lifeline for the government. And the FX reserves of Ethiopia, their low level of FX reserves has always been a kind of weak point, and that has been, they have been eroded earlier during this year. They're going to get a bit of a boost from the SDR allocations. But then, yes, we don't know if what this IMF review is going to come up with, if it's going to be more loans dispersed to the government, but it's probably quite likely that it might require a more deeper debt restructuring than the bondholders are actually anticipating.